To help us set up the trading day, we bring in Kevin Hincks, co-host of Fast Market, live at the CBOE. Good morning to you. Some of your thoughts.
Good morning, Nicole. CPI data coming out a few moments ago, and it's all over the board. You really got to dive into the tables to see how fascinating this is. Number one, here's the numbers. Headline, month over month, CPI up 0.3. That's in line with expectations and higher than last month. As you know, it was down a tenth. Year over year, headline CPI up 2.3%. That's a tenth better than last month, 10 better than expected. Core CPI, ex-food and energy, up 0.2. That's a tenth better than expected. But core year over year CPI 2.8%. That is unchanged from last month. But it's where you get fascinating is where you get into the tables. And here's the craziness. Energy comes in up 0.7. You think about what crude oil's done last month. You say, how can that happen? Here's how. Energy commodities down 0.2. Gasoline down 0.1. Fuel oil down 1.3%. How is energy going up? Here it is. Natural gas, or what we call in the tables, utility pipe gas services, up 3.7%. That skews all the energy higher in this report. So energy prices, other than natural gas, all coming down, but skewed by that big number. How about food? Food's a fascinating one. Food was only down 0.1%, but food at home down 0.4%. How about this, Nicole? Eggs down 12.7%. If you added in meat, poultry, fish, and eggs, down 1.6%. Why is food only down a tenth? Food away from home up 0.4. Full service meals up 0.6. So food in restaurants going higher, Nicole. There's the problem there. Airline fares, after being down 4%, down 5.3% the last 2 months, airline fares down another 2.8%. That being said, motor vehicle insurance up 0.6%. Used cars and trucks down 0.5%. But that natural gas number skewing a lot of the energies. Housing, shelter up 0.3. That was more than half of some of the increases. So big swings in some of these numbers. All things considered, a muted inflation outlook. And here's the key that is going to start my narrative today, Nicole. Last 3 months, headline CPI up 1.6%. Core up 2.1%. The analysts, the clearing firms, even the Fed is getting inflation wrong. The odds of a rate hike that are being pushed back, Goldman Sachs came out there first, should be in December. They should all be moving up. Jerome Powell, the FOMC, should have more latitude to lower rates now because the tariff questions are dissipating and inflation, Nicole, is coming down.
Right. Well, I mean, there's still the endless wild card of what happens, but you're making the right point in that we're not seeing inflation flying off or anything like that. I mean, the main culprit within this CPI, definitely, you went through it beautifully. I mean, you told us what was going higher. But worth noting, shelter is the real stickler there when it comes, right? I mean, Manhattan rents are top dollar. You can't get a place in Manhattan. It goes on, before it even goes on, it's rented, and it's a ridiculous price. So we don't know what the Fed does. Most folks are still betting now on September rather than July, I believe. And at the same time, I saw Goldman Sachs raising the price target. What was it, 6,500 now?
Yeah, well, exactly. You know, now that the tariffs are coming off or greatly decreasing, right, from China, and trade deals have started to come. I expect more coming quite soon. Now everyone is doing the 180 on all their price targets, right, and moving them back up where they were all moving them down in unison. Now they're firming up and moving back higher. But Goldman Sachs came out yesterday, Nicole, and said their first rate cut is not till December. I think the narrative over the coming days is going to switch to rate hikes moving closer. Why? Because the Fed doesn't want to have the Fed funds rate be too restrictive. And if inflation is coming down like these numbers say over the last 3 months, they should have more latitude to lower rates. Not, remember, Jerome Powell talked about the uncertainty about tariffs is why they were keeping rates stable, or we could afford to wait, was his quote. I don't know if this holds that same narrative as inflation is coming down and now the tariff worries are starting to dissipate slightly.
All right, and last but not least, anything else on your radar here? I'm looking forward to when Powell speaks later in the week. I'll be hanging on that. Tomorrow's PPI, retail sales, more earnings. Any final thoughts here, Kevin?
UNH is going to skew the Dow Industrial Average. That's why it's down. UNH is down almost $40 pre-market on the CEO change, but the markets are firming up. But watch, the Dow's going to underperform all day, Nicole.
All right, Kevin Hincks, great to see you. Always a great setup. 23 minutes to the opening bell, Kevin. Thank you.